Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Welcome to anyone on YouTube or watching us later. Make sure you subscribe to the channel. And today's topic, we're going to talk about war. So how to potentially make some money if this happens, how to sort of proof your portfolio at the minute about it, and where we should be looking for stocks if we think this is going to happen. Now, double bottom on US on the Dow. There's loads of double bottoms on everything at the minute. So we actually talked about sort of Nasdaq last week, and we talked about bouncing off this level, which it did, and then it dropped again. So we were looking for it to come back to this double bottom, and it didn't. It actually made a lower low here. So this tells us there's more momentum to the downside, and this means that this here is now wrong. It's broken that, so it's removed. So what we have to do at this particular point then is look where the next sort of level is. Because once that sort of level now is broken, we can go further. Now, probably the most straightforward level is here. But we also have a pretty decent one there. 1, 2, 3, 4, 5. So in that little sort of zone there. So this could drop a little bit further. This could drop down into sort of this area. I'm going to quickly go over all three of them there. So this is come back to this area. So we've had this one as a lower low. Okay. We also have the S&P, which is at this level. Look, so 1, 2, 3, 4. Okay. So we have had a double bottom there or a horizontal level. You can say at this area. I'm going to remove these other trades. They're trades we took before. Get rid of all these. Remove. And remove. Now this here is, we've had a sell-off. It's hit this floor and it's bounced back up. And we can see there's 1, 2, 3, 4, 5. Well, there's technically 6 bounces on this here, but we'll all class this as this one bounce. Now, Blaze has asked a very, very good question. Where would you consider a point of reversal and not a dead cat bounce? Okay. Now, at the present moment in time, I would not be considering a reversal at the minute. With what's going on, so okay, so we'll break it down a little bit. So what's going on in the market at the minute? What's the first thing that's going on in the market at the minute? Answers on a postcard, please. So what's the first thing that's going on? A sell-off. Okay, so we're having a sell-off. That's one. But why are we having a sell-off? Okay. Ivan, I just said it there. Inflation, Fed, Russia. Okay. Now, one of those things is bad enough. Well, we have now at the minute, we have 3 of them. So we've had a sell-off here. Why? Because everyone thinks that the stock market is overextended, which is fair enough. Then we had this little sort of bounce here. And then we had all the talk about inflation. And now what's ever happening is this is war, okay? So is there more buyers or sellers in this market at the moment? And we'll just jump over onto the Dow as well. It's not just so we're on the Dow, we're on this really strong level here. So we have the Nasdaq, the S&P, and the Dow. Are there more sellers or buyers at the minute? There's more sellers. So would we then, cash is king. So at the minute, would we think of selling off any of our, or would we think of buying any of these positions here at this particular point? Would we think about buying at this level? Would we think of buying at the S&P level here? Would we think of buying at the Nasdaq area here? As a general rule, no. Now, what some of us have done is you could put a limit order on these levels and get triggered in, stop loss here, and then triggered in on the way up. Now, the problem with the likes of these bounces at the present moment, because we've more sellers in the market, we don't expect too big of a bounce before it continues going down again. So do I expect these levels to be broken? Probably. Probably. It literally comes down to what Putin is doing. Literally comes down to that. It comes down to something as simple as that. So he's after moving into 2 of the other countries, which means that the Minsk agreement is sort of null and void, which means then he's provoking Ukraine to invade or to attack Russia. So that means then it doesn't look like he's the bad guy. But that's what he's done so far. Now, the market dropped massively, and then it had a little bit of a recovery Friday, a little bit of a recovery, or yesterday, a little bit of a recovery. Now, I know there's not a whole lot of historical data on this, but in the time of war, stocks generally drop about 15 to 20%. Now, I know this is an absolute horrible conversation to be having. Horrible conversation to be having. But putting this into perspective, okay? This is not going to be a happy webinar. So just imagine. Now, I didn't look into that. So my question here is that we are at a point where we think that the US stock market is massively overextended. Correct? Then we have the threat of war happening. On top of that. Now, if historical data tells us there's a 15% drop, do we expect even more of a drop than 15% if this goes ahead? Absolutely. Absolutely. Now, I can't guarantee whether it's going to happen. In my opinion, it's probably not going to happen. There may be little small incursions and stuff like that there. So, but do we expect the market to continue dropping? I do. I expect this to drop a little bit further. Now the question is how far, by how much? And then the last question is then do you hold on to your positions? Or do you jump out of your positions? Do you hold them? Do you jump out of them? Absolutely. And then for how long? Make sure that you're in good stocks. You're in stocks that you think that will continue, even if this happens, even if this continues for the next 6 months or a year. Okay, so that's where we're at the minute. We're looking at the market, trying to have a look at it long term. The year of 2022. How far do we think it'll drop? And then do we think 22 will actually make a higher high? or will it be a lower high 22? And the way it started, we'd expect it sort of to be a lower high. Maybe 2023 break the all-time highs, but the way it's going, it looks like we're going to have a negative 2022. And obviously, there's a long way for the market to go before that happens. But at this present moment in time, looking at the 2-month data that we've had here so far, it looks like it's going to be a long year. So then you have to ask yourself, are we better off cutting these small stocks that are up slightly, they're up 10, 20 quid? Are we better off closing our stocks that are down, the likes of the ones that are down massively, so on and so forth? Yeah, so selling the risky lower class stocks, absolutely, Alistair. That's what I'm potentially suggesting. So you're in the likes of the Apples, the Facebooks, the Googles, the Netflix of the world, the Nvidias, the Nikes, the Walmart. Well, yeah, the Walmarts of the world. That even if there is war, you would expect those companies to drop, but not drop 100 or 150%. That makes sense, or 50 to 70 to 80%. That makes sense. So you don't expect them to drop that far. Whereas those lower risky stocks that we were looking at growth, they may. So that's what we're sort of looking at. That's what we're looking to go. Now, where do we go into? What do we look at? There's really bad feedback on the line. Is that just Stuart, or is that for everyone? Okay, so it's just Stuart. Oh, Shane, thank you very much. I sound okay to Shane. Oh, that's so cute. So Stuart, it seems to be only your one. So if we look at the markets, I wasn't being cute. So if we look at the markets, the only one that there are two sort of places that we've been looking heavily. Now, one was the likes of the US market, and the other is the European market. Now, whatever effects it has on the US market here, we would expect a bigger effect on the European market. Okay. Why? Because this is all to do with Europe. This is all to do with Europe. So we had this really strong level. Now, some of you guys took this. I know, Shane, you actually took this here. And we talked about this on, was it Sunday? We talked about this on Sunday, popped it in the group. It was a 4-hour trade here. And we would have got triggered in here, went up, hit a 1-to-1, and then dropped like a stone. Now, depending on how you manage that, it's you either had a winner or you got stopped out. So in this case, Shane got stopped out. Okay, cool. So you either had a 1-to-1 winner or you got stopped out, depending on how you manage it. Now, the idea is we have a descending triangle going on here on a smaller time frame. So we have a descending triangle. Anyone who's doing the boot camp, this is a typical descending triangle coming on here. Hit the floor, bounced, hit the floor, bounced, hit the floor, bounced. And now look, it is broken to the downside. So it's broken to the downside. Now, we having a little pop to the upside here. So if this pops back up here and hits that level there, what would we expect to happen at that point? Continue going up or drop? Well, there's two things there. We'd expect it to drop, but it may pop up a little higher. It may pop up a little higher. It may go up to that trend line there. Now, I don't think it will, but it may pop up to this trend line here and then drop. But the highest probability would be is that it hits there and then drops. Why? Because that's a much stronger level than the trend line. So that could be one as a short. So we could be looking to change that around. Now, I wouldn't be putting a limit order on this one. I would wait for the bar to finish. I'd wait for the bar to finish. And then if it gives me a nice little high test bar, something like that, then I'd be looking as a short on this. But just to be aware that once these bars set up in times like this, they don't wait around for us. They set up and they're there. You either take them or you don't. And then all of a sudden they're gone and you're going, sugar, I should have taken that one. That's the joys of trading, isn't it? So that's the German DAX. So we do, if we think that war is going to continue, we think that there's going to be sanctions, we think that there's going to be a little bit of disruption, the European market may well be affected massively by it. Now, when I say massively, I mean more than the US market. Why? Because it's direct conflict with the likes of Europe. We look at the French CAC. Again, we were looking for the French CAC to come down to this purple level. And look, with a big sell-off, a gap down, and now look, it's popped back up. So we'll look at this on, say, the 4-hour. We can see, look, a gap down here, and then opens back up. A little bit of a bullish day so far. Now, is that just a bullish day for the sake of a bullish day? I would expect this. I would expect more downside depending on what's going on, but I expect more sell-offs on the likes of this. So are we looking to buy this at this level? Nope, not for me. And again, we've come down to a really nice level here. I came down and hit it and then popped back up. Now, the only way we can trade the likes of this now is a limit order. There's no way we could have waited for this bar to finish. We had to buy it on a limit order. And then if you'd have taken at this level, done well, but you'd be a brave person to take that as a buy at that particular level. So if we're looking at it, we'd expect more of a sell-off on the German DAX and the French CAC, and then a little bit of a sell-off on the likes of the UK. So why are the German DAX and the French CAC having more of a sell-off than the UK 100? Anyone hazard a guess? Anyone hazard a guess why? Absolutely Brexit. Brexit, Brexit, Brexit. It's the first bit of good news the UK have had. The UK was already cheap because of Brexit. Yeah, it's so cheap it can withstand war. No, is that England's are not part of Europe, which means then that they are not getting, their stocks are not getting hit as badly as the other stocks are when people are talking about the European Union. And that's why Germany is getting hit quite hard, and the same with France. Because isn't Germany sort of the epitome of the European Union, isn't it? They're also the two major players in what's going on. Macron is trying to set up a meeting with the likes of Putin and the Ukrainian president. No idea how to pronounce his name. And the same with the likes of Germany. Now, I talked about stocks that we could potentially buy and jump into if the likes of this happens. Now, commodities become, yeah, thanks for that, Alda. Zelensky, is that how you pronounce it? Zelensky? Zelensky. All right, well, that's about as good as you're getting. Okay, so oil, Zelensky. Who knew that these webinars were educational? Okay, so we've had a massive run on the likes of oil. Now, again, if this sort of happens, the supply chain may be cut down. We may have sanctions on the US and Russia. We may have sanctions on Europe and Russia. Russia then won't send over their oil, trade wars, all that sort of stuff going on here. If someone gets off the fence and backs aside, that means then they're going to be cut out of the likes of this. So which means then that we could get a supply chain issue here. We may get another spike to the upside, and this could hit $100 a barrel, could hit $150 a barrel, depending on what's going to happen. We'd expect it to take off a little bit more. Do I think oil will get cheaper if this happens? Nope, I don't. I think there's only one way for this to go if it happens. The same with natural gas. Now, natural gas is a little bit of a slow burner. See what I did there? So natural gas is a bit of a slow burner. It is not flying as much as US or oil. So it's a little bit slower. And you have to wait for it to come back into these areas again for to potentially buy it. But some of the stocks that sort of take off in the likes of things like this, just bear with me, is the likes of Boeing. Historically, Boeing have taken off. This is not Boeing, is it? Bear with me. Now, if we have a look at Boeing, it's been trending sideways, well, slightly down to sort of sideways at the present moment. Now, why they've sort of taken off historically is because of the area they're in, what they're doing. Okay, it's the type of technology, it's aircraft, it's all that sort of stuff, Super Hornets, the FA-18 Super Hornets, stuff like that they have been giving to the likes of the air forces, and that's why they have sort of historically taken off. Now, the second one that has historically taken off is Lockheed Martin. Now, Lockheed Martin work massively with the defense forces. So they get an awful lot of government contracts. Now, again, there's not a massive trend on the likes of these. We're not looking at these as stocks that are trending. We're not looking at these as stuff that, oh, we should buy right now. We're looking at these as, if this takes off, we could see a jump on the likes of these. Okay, we could see a jump on the likes of these very, very quickly because of stuff like this. Okay, so what we're doing is we're anticipating. Now, sometimes we anticipate and we're a little bit too early. Now, remember when we were on the aisle, when we were looking at aisle, and we were talking about jumping in on like the aisle. We were down for a little while. We were down for about 3 or 4 months. We're in the negative sitting for 3 or 4 months before it sort of turned. So again, we may be a little bit early on the likes of this, but again, probably not wrong. And I understand that it's not the best sort of topic to be talking about again, but we're looking at the likes of these. We're looking at markets. We're looking at stuff that's we shouldn't really be looking at, should we? There's no way we should be looking at the likes of this stuff. Now, is there anything we can jump in there? Not really, but all of a sudden, since the beginning of 22, we've had Lockheed Martin has had a pretty good run over the last beginning of this year. Yes, it's at the triple top there, but I'd expect if this continues to be people to be jumping in on the likes of this. Absolutely. You took the words out of my mouth. Raytheon Technologies, okay, as well. They're ones there. They do missiles, they do defense contracts, systems, all that sort of stuff as well. So it's something that also has been doing pretty well. Now, I know Raytheon were they bought out or did they buy someone out not so long ago? One of my students actually works for Raytheon, and there was a buyout. So that's what happened. So that's what happened there. So this one is trending much nicer. This one here looks like something that you could actually invest in, as in a little bit of long term as well. It's slowly growing. It's not going to turn you into a millionaire in the morning, but at the present moment, it is trending quite nicely. Now, someone said Rolls-Royce. Not so much. Not so much. Yes. Yes, a little bit, but not so much. Okay. I wouldn't be expecting a big jump on Rolls-Royce if we did have a little bit of war, if there's something like this happened. It's not something that I would expect, but I would expect to see a sort of a big sell-off on the likes of. I'd expect to see a big sell-off on the likes of technology. So someone said earnings coming out very shortly. I'll just have a quick check on that there. Rolls-Royce. Is it this one? Looks like it. So the earnings is out in 2 days. Are the earnings expected to be a hit or a miss? But if we're looking at the earnings, so look at the earnings they've had. Here they were up 18%. Here they were down 547%. 700% down. This one, they were slightly up. Is it something that we would look to invest in? No. Now, I jumped into Rolls-Royce because I was looking at it's, in my opinion, a little bit undervalued for what it does. But again, would I be jumping in on this because of earnings? Absolutely not. just to give you a little understanding of what's happened with earnings in the smaller stocks. And yes, I'm classing Rolls-Royces now as a smaller stock. Look at Crocs. Look what's happened here. And Crocs earnings were up 8%, and the revenue was up 0.3%. Look at Nvidia. Earnings was up 8%, and revenue was actually up 3%. And it still dropped. Give another example, Disney. Disney was up 43%, and earnings was up almost 8%. And it had an initial jump and then gone nowhere. When in the right mind would you see a stock 40% up in its earnings, revenue nearly 8% up, and it not move anywhere? So that tells me I'm not looking at the likes of these. I'm not jumping into the likes of these. This is not, technology is not something I'm sort of looking into at the minute. The likes of oil, the likes of natural gas, potentially some defense contracts, stuff like that there. And that's where we could potentially look in and make some money. Negatives could be the likes of the aviation and travel. This could lock the whole world down again. This could lock most of these companies down, which means then travel is affected again. Not only with COVID, but also with what's going on. You have no one wants to travel because of what's going on. With what's going on at the minute, would you want to be going to any of the Eastern European countries at the minute? No, absolutely not. So again, that may affect travel industry. So just keep an eye on the likes of that. So that's something that we're sort of looking at and keeping an eye on. But again, I don't want to go too much more into the likes of that. Now, I'm gonna jump on to crypto there now for about 15 minutes. But is there anything you want me to have a look at before we jump on to crypto? So wheat. So wheat has this very, very slow trend going up. And it also has a triple top. If we're looking at this, it's a big old triple top happening right there. I'm going to move that a little bit. I'm going to bring that down a fraction. So we'll incorporate 1, 2, 3, and then I'll incorporate 1, 2, 3. So this zone, so this is a buying zone, and then we've hit that sort of top. Well, if war happens, wheat will fly. But again, it's one of those commodities. You'd expect commodities to fly as well. Likes of copper, likes of steel. You'd expect them all to take off. Ukraine is the top world producer of wheat. Okay, yeah. So again, but you would also expect the rest of the commodities to take off as well. But again, will gold take off? But remember, as human beings, we follow a very linear pattern, don't we? We're very straightforward, we're very simple-minded people. So in times of uncertainty, what do investors do? They jump into gold. They go and buy gold. If you're someone who's in the likes of Ukraine, for instance, and had a few quid, you're probably transferring all your money into the likes of gold bullion, aren't you? And physically bringing it with you, or you're physically putting it into the likes of Fort Knox or places like that in Ukraine. That's supposed to be safe. So that's the idea. That's what people do. Okay, so we follow a train of thought that's very linear. So we have to try protect what we have. You're not going to buy houses. You're not going to buy property. You're not going to buy anything like that because our land. Why? Because it might be worthless by the time it's finished. And it's just a question of whether this spreads to other countries and if it takes off in the first instance. So yes, gold, silver, absolutely. But again, I know we've gone much deeper into this than I've wanted to, but yeah. So someone asked for Deere. So John Deere, great tractor. One of those stocks that has been trending quite nicely. But if you look at it, it hit an actual double top. Let me make that a little bit thicker. It hit a bit of a double top up here. Now look what happened. It rejected that level. Did you take it short, Alistair, at that particular point? No, I was wanting it to trend. But okay, so look at this logically. The market is an overall downward trend. So we have more momentum to the downside. I understand that this market is going up. But if we look at it since, just say here, since March 2021, it hasn't really gone anywhere, has it? It's been pretty flat. And we get a horizontal there. Okay, it's literally bounced between these two levels. So $400 and $320. Just bounce between these two levels. When is a double top classes too far apart to be taken into consideration? But if we look at these here, so there and there, I'm adding these two in. So see these two levels there as well. We zoom in on those. I'm counting those in there as well. I'm looking at those two and saying it bounced there once and it bounced there twice. Then it went up a little bit higher to that point. So I'm classing that as sort of a zone and saying that there's now, instead of having a double top, we actually have a sort of a zone there going on. And bring that down a fraction and actually make it straight. So now if I pop this up a touch, about there, okay, it's hit there, come down, hit there, come down, hit there, come down, hit, come down, hit, come down, hit, come down, hit, come down. So there's 1, 2, 3, 4, 5, 6, 7, 8. So once you take all this into consideration, we can't just look at this as a double top because it's not just a double top. We see all these other information here telling us that this is a drop. Whereas at this particular point, if this was posted in the group, this would have been a very, very good trade to take as a short. Now, the next question is how far do we expect this to drop? Do we expect this to stop here? or do we expect this to continue? So do we expect this to stop at a trend line, or do we expect this to continue going down? All right, it's on the Nasdaq. I was wondering, was it on the New York Stock Exchange, or was it on the London Stock Exchange? That's why I went back and checked it. Okay. But again, yes, you thought it was going to go up, but the overall market is down, isn't it? The overall market is down. So there's not, yes, we're looking at this and we're trading this as a sideways market, but unless their earnings, they have earnings coming out that's going to be massive, we'd expect this to drop. So earnings come out. Earnings come out on the 18th. And look what happened. It's dropped since earnings, even though earnings was 28% up and revenue was 3% up. So even with the good earnings, I'd expect that to drop. I'd expect it to come down. If we look at balls, is it this one, the top one? Yeah, Volkswagen's having a good day today on the back of the Porsche IPO. But again, do we expect this to turn around or continue dropping? Would expect this to continue dropping at the moment, wouldn't we? Absolutely. Absolutely. What's the difference between Porsche and the likes of Aston Martin? Yes, it's probably a more, what would I call, a recognized brand. But again, it's a luxury car that we've all been in sort of indoors, stuck in house for 2 years that we haven't had a chance to drive. So yes, I understand it's done well here, but it could, in theory, drop like the other luxury car brands. Okay, so we're going to pop over and have a look at BTC. So BTC didn't react in the same way we wanted it to react. So we were talking about a potential head and shoulders pattern. We're talking about it, the neckline here. And this is why when we're trading the likes of these, it's so important that we know how to trade these patterns. Because I know in my group, one of the guys posted, yeah, I got triggered into the head and shoulders pattern. Well, it hasn't broken the neckline yet, so we shouldn't have actually been triggered in yet. So now the next question is it going to come back to here, or is it coming back to the 28.9? So it'll be interesting to see now if it makes a lower low and then a lower high, or whether it'll make a lower low and then pop back up to this level here again. Pop back up to this 40, what was it, 45,000 level. So unfortunately, it hasn't played out like we wanted to play out. And we've had a little bit of negative movement to the downside, which means that the little bit of bullishness that we had in the market, a little bit of at the minute, yes, it is. It's following the tech market, absolutely. But it's not hard to see a comparison. It's not hard to see a comparison as well with the likes of war. It's Russia is a big user of the likes of, I said, the user of producer of the likes of Bitcoin as well. So it's a major player now. With this going on, it's going to be quite negative, isn't it? It's going to be quite negative. So we need to now assess and see how this plays out. Now, we talked about, if war happens, talked about commodities. But how many people will pop their money, instead of popping their money into the likes of gold, how many people will put their money into the likes of cryptocurrencies? As long as you remember your password, and as long as you can log into a platform, that your money is relatively safe. The only people that you have to watch out for is hackers. So again, as a safe haven, this could be an area where people start putting their money as well if the likes of this continues. Now, it's not too far-fetched, is it? You will have an awful lot of younger people that will put it here. The older people will probably go to the likes of gold and silver, but all younger people will be popping their money in here. It means you can actually access your money anywhere in the world, wherever you want, as long as you have your wallet, or as long as you have your login details for your exchange. All you have to worry about whether the market at the price that you bought it at is higher or lower. That's all. So crypto could see a little bit of a pop to the upside if the likes of this kicks off as a safe haven. But again, it's not something we want to see. We want to see the markets naturally taking off. We want to see the political market sorting itself out and the world going back to normality. And if it goes back to a bit of normality, then we can potentially see the likes of this happening. But at the moment, it looks like it's going to the 28,900 level here, but it has to break this floor here first. So the 34, it went down as far as 33. So it has to break that 33 level first before we're looking at any sort of pop to the upside on this. But again, yes, I have an entry here and another entry there. So let's see, did ADA hold that level, or has it dropped below? And ADA has broken that level there. And again, we're now after breaking sort of this level. And where is the next level? Who knows? Go on to the weekly chart. Problem is eToro doesn't give us enough data. But yeah, that seems to be a level there. We'll actually get another horizontal rather than use those ones. So 3.7 or 0.37. Is it a bit far-fetched to see it dropping that far? Not at all. Not at all. Not at all. And then if we get some sort of pop to the upside, we'd expect these to take off. But again, we all understand that crypto is a little bit of a supply and demand product. So we need to have that demand. And we need the demand greater than the supply. And at the minute, it's not. Supply is greater than the demand. And that's why we have dropped. XRP. XRP has had a little bit of a pop to the upside, and then it's sort of gone back, but would expect it to come back into sort of this area. In my opinion, if you were looking to buy this, I'd be looking to buy it somewhere down here. In my opinion, between the 0.12 and the 0.5 is a potential investment area for it below those levels. But again, time will tell. Can we see the fibs there on that one? Back to the daily. Yeah, well, there's rumors XRP will win the core case, but again, it's one of these things that you have to look at the market. Even if they do win the case, the market is down, so you'll probably see a jump to the upside, and then it'll continue going down. Does that make sense? So we'll expect it to jump and then continue going down. And then Matic. So Matic has actually come back to that sort of, is that a triple bottom now? On Matic. So there, we've had a little bit of a rejection on that. Hey, Marcus. I don't know whether you've learned that from me, or is that a saying that you say yourself? But yeah, I say that all the time. But again, do we expect this to hold, or do we expect this to pop to the downside? It'll be interesting to see if this fiddlesticks. It'll be interesting to see if that comes down and hits that ceiling. So if that pops back up and hits that ceiling, I expect to sort of break this low, wouldn't we? So pop back up, hit here, it'll drop back down. So I'd expect that to drop down. I'd expect this to break this level. Okay. Well, look, everyone, it's been an absolute pleasure. Thank you very much for listening to me talk about the markets for the last hour. Wish I had better news for everyone, but thank you very much. Hope you have a lovely evening, and I'll speak to you next week. Bye-bye.